your experience with the banks that you've been working with, when does a bank think about consolidating all of its payment platforms?
So banks are attacking this problem multiple ways depending on their issue. As we've talked about, with payments growing dramatically, instead of patchworking some of their legacy systems, they're attacking their biggest pain point first, which usually falls into high value, low value cards and possibly fraud. Those are the categories that they might tackle. So going from, say, 80 systems to 10 systems would be step one, and then maybe going from 10 systems to 5 to 1 would be step 2. Very few banks are taking the approach, let's take 80 systems and reduce it to 1 out of the gate.
At what cost and over what period of time?
When we're speaking to banks about the strategy that they're making, because first thing, the banks need a strategy. And surprisingly, not all the banks have a strategy for consolidating their payments. Most of the executives we speak to the banks talk about this over 3 to, say, 7-year horizon to execute on their strategy. And with deliverables happening sooner than that, but kind of making progress over the next 3 to 7 years.
I'd add to that in terms of what Ralph's saying, because from my opinion, I think it's a 20 or 30 year journey. I think that today we talk about different payment types and we talk about different processing entities, and I think in 20 years' time we're gonna look back on this and say, well, do you remember when we used to actually differentiate between a point-of-sale system and an ATM system, or when we differentiated between bulk and wire?
So how does a typical commercial bank in Asia, which is essentially in all of the 3 business areas, retail, corporate, wholesale, start to think about consolidating its payment infrastructure, and how does a company like ACI sell into that?
I think you could score each of the silo payments systems that a bank actually has today, whether it's in retail or consumer or corporate or wholesale. And at the bottom of the level, a little bit like Maslow's hierarchy, you got systems that are reliable, and you got systems that are compliant, systems that are efficient in terms of costs, systems that are responsive in terms of the customer needs and what you need to do, and then you have agile systems right at the top. And for each of the systems, you would be able to score where you are. And in retail consumer payments, banks often have an ATM system, and they'll have a point-of-sale system, and they'll have a mobile banking system as well. And they may have other systems within that. And they should be able to look at where on that scale of agility these different systems are, and then look at picking the best of that agile system and moving towards new architectures and new technology. It doesn't necessarily mean they have to do a wholesale change out of what they have today. It can be an iterative process taken by steps to move towards that.
And to add to what Jeremy just said is, the issue the banks have today is their payments are going up, as you just mentioned. However, they're not allowed to spend any more money. Most CIOs will tell you that their technology budgets are flat. And so if your payments are growing at 10%, how do you manage the growth when you're not allowed to spend any more money? And the issue is really the consolidation. You cannot continue to build a siloed application into every country or for every payment. You have to come up with a more efficient way of doing that. And that's why there's so much discussion today around hubs and what hubs mean to the efficiency of payments globally.
In order to do that, it's not just about technology. You have to think a little bit about process and organizational structure in that sense. Do you see banks in Asia setting up, as you mentioned, a specific point person?
You're seeing some banks moving towards that, and in particular, there's a leading bank in Thailand that is implementing a transformational project, and that is looking at reducing their bulk payment complexity at the back end and reducing a very high number of interface points that they have into a much smaller number of points to enable them to simplify the process, be more real-time, reduce costs. So you are seeing it happening.
I can say in the North American and the European market, they've named somebody, usually a payment czar or the CIO, has by de facto taken on that role.
I mean, you still see the Asian banks because corporate payments as a proportion of total payment opportunity is higher in Asia than it is in Europe and America. So you see the corporate end of the bank has a lot of focus at the executive level because it has very high growth rates, 40, 50, 60% compound annual growth rate for the last 3 or 4 years. So it gets a lot of attention. The consumer side appears to be a little bit more fragmented. You'd often have a credit card division that sits standalone on the side and may even have its own branding and have its own operations, and then you'd see the debit card business and other consumer payment instruments sitting within the bank.
But that's exactly where the problem is, because corporate is also a large anchor contributor to the deposit side of the business.
Yes.
And therefore, in a number of Asian countries where margins are still very comfortable, the desire to change is not there. It should not be there because they make money on the float.
But there's a lot of focus on the corporates right now because the corporates are seeing their credit lines drying up because of the financial crisis, and they're requiring much better liquidity management procedures and processes, and the banks need to provide that to them. They need to enable them to assess what their liquidity positions are across multiple countries. They need to mobilize the ability to transfer those funds across boundaries, and they need to provide products and facilities that are going to give them a better return and optimize the actual returns they have. So there is a huge amount of activity in the corporate space today amongst the banks in Asia.
I noticed that ACI as an organization has also been consolidating your product proposition.
Yes.
You've been trying to rationalize them.
Oh, absolutely. At Sibos, we're announcing Agile Payments, which is the integration of initiate, manage, secure, and operate, which is the chain of payments. And in that, we're announcing that the architectures are going to be able to more simultaneously integrate together to form a better infrastructure for the banks to make payments. And if the banks choose to implement consumer, corporate, wholesale together or operate them in silos, that's really up to the bank's decisions to how they do it. But there's nothing technology-wise that's stopping them.
How would you describe ACI's relationships with your key bank clients? How do you think through with them, what they need to do? How often do you go back to them and say, look, you've got to consolidate what you've got in the back end and so on? How would you describe that relationship?
With our key banks, the relationships at the executive level is really getting on the same page with the strategy of the bank. And I can think of a global bank right now who has a strategy where they settle in about 38 countries with high value. And they've come to us and said, we've put in a solution for SEPA, and it's worked really well. And now what we want to be able to do is see if we can consolidate the other 38 systems into one spot. We're going to see more and more of that coming from our customers as our strategic alignment of consolidation of payments aligning with their strategies.